Industry is going to consume all of mined silver. So the 850 million ounces that we mine as an industry on an annual basis is going to get 100% consumed by the growing industrial demand for silver. We're setting up for the greatest squeeze in the history of silver, and it will unfold by the end of 2025. We've seen the price move from $16 to $30 over the last couple of years. I think we're going to see a dramatic move before we get to December 2025. I think the price is going to get way ahead of that. Is it $40? Is it $50? I think as we go into 2026, we will be trading at all-time highs.
It has been jumping from record high to record high, and a lot of mainstream investors and analysts who were indifferent or even hostile toward the yellow metal have once again come to recognize its true value. Gold's younger brother, silver, has received less press convergence, as is also quite expected. Silver prices spiked to $36 per ounce in the early 1980s, but languished through much of the late 1980s and 1990s. It wasn't until around 2006 that silver began to surge, driven by China's massive demand for commodities during its supercycle. The 2007 to 2009 global financial crisis then triggered a flight to safety among investors, propelling silver prices to nearly $50 per ounce by April 2011. After retreating, silver spent much of the late 2000s and 10s trading in the high teens, eventually finding a new floor of around $20 per ounce in the early 2000s and 20s, a level it has rarely dipped below. In 2024, silver prices surged above $30 per ounce, reaching $32 in May, which brought the gold-to-silver ratio to its lowest point since December 2022, before easing to around $28.50 by early August. This price strength has been underpinned by a global silver supply deficit that persisted through 2023, with an even larger deficit widely expected in 2024-2024. Shawn Khunkhun, CEO of Dolly Varden Silver, highlights that by the end of 2025, all silver mined globally will be fully consumed for industrial purposes. Khunkhun is skeptical of some institutional reports and believes the market lacks transparency, but he predicts a dramatic price move before December 2025, potentially reaching $40 or $50 per ounce, with all-time highs likely as we move into 2026. He notes that during the past 100 years, investment demand for silver has only accounted for about 30% of the overall market, with the remaining 70% going to industrial uses. We're about to explore the video, but first, make sure to subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
Look at silver and is to say that in the last 100 years, 98% of that last 100 years, we've been in a bear market for silver. We've had two moments, 1980 and 2011, where we went into a bull market, but it was very short-lived. And so if you look at that last 100-year period, investment demand for silver has been at 30% of the silver universe. The other 70% is going to industry. So during a bear market, we've had a 30% investment demand. During the bull market, what drove the bull market was investment demand. It was investors going out. It was on the back. If you go back to 1980, the gold was running from $35 an ounce to over $800 an ounce. The Hunt brothers cornered the market, and the price of silver spiked. It was not based on photography or the big industrial components and usages of the time. In 2011, the price spiked, the move from $4 to $49. Again, it was on the back of investment demand. So my point here is, if in the last 100-year period, 98% of the time we've been in a bear market. Okay. And during that bear market, we've had 30% of the silver market consumed by investors. But we've shown you that when we get into a bull market for precious metals, and we are unequivocally in a bull market for gold, it's hitting record highs in all currencies. And we know silver's got beta, and we know silver will outperform. It has every time. It's coming. It's inevitable. But there's one difference, Jesse, this time. And the difference is, by the end of 2025, so this is 15, 16 months from now, industry is going to consume all of mined silver. So the 850 million ounces that we mine as an industry on an annual basis is going to get 100% consumed by the growing industrial demand for silver. So in the last 3 years, we've had 250 million ounce deficits for silver already. Industry is growing usage. Investment demand will come. It's been 30% during a bear market. It's going to be a lot higher than that. It'll be 2, 3, 4 times that during a bull market. And so we're setting up for the greatest squeeze in the history of silver, and it will unfold by the end of 2025. But we are already seeing, as you know, going back to 2022, 2021, 2023, the 250,000 ounce deficit is here, and it's growing, and it could be 500 million ounces this year. I don't always believe in the institutes and the reporting that we're getting, if is it accurate, because the market is not as transparent, and it's changing, with some of like the Shanghai Metals Exchange, and we're starting to see more price, the paper price, the digital price represent more of the physical market, but it's still got a long way to go. So if you want me to put a calendar on it, Jesse, I think that look, from $16 to $30 over the last couple of years, I think we're going to see a dramatic move before we get to December 2025. I think the price is going to get way ahead of that. Is it $40? Is it $50? I think as we go into 2026, we will be trading at all-time highs.
According to Investopedia, the average gold-silver ratio during the 20th century was 47 to 1. In the 21st century, this ratio has typically ranged between 50 to 1 and 70 to 1, but it broke above that range in 2018, reaching a peak of 104.98 to 1 in 2020. The lowest point for the ratio was 35 to 1 in 2011. To put it another way, it currently takes 85 ounces of silver to buy 1 ounce of gold, compared to the 20-year average of 68 ounces. In 2020, silver prices surged by 43% from January to December, while gold's increase was a more modest 20.8%. Earlier that year, as gold prices climbed above $2,000 per ounce, a 39% gain, silver rallied to nearly $30 per ounce, marking a 147% increase. During this time, the gold-silver ratio dropped from over 100 to 1 to just above 64 to 1. A similar scenario could easily unfold again, especially with the Federal Reserve expected to lower interest rates. Shawn Khunkhun has observed that even the most dedicated silver bulls are starting to capitulate, doubting that the historical gold-silver ratio will ever return to its previous levels. He emphasizes that while all the gold ever mined still exists, silver gets consumed and is not typically recycled, further tightening its supply. Khunkhun also suggests that as gold prices continue to rise, central bank buying may eventually slow down, and gold will become increasingly out of reach for the average buyer. Let's now turn our attention to the video again.
The most staunch silver-centric bulls start to capitulate and start to throw in the towel and start to talk about how we won't, the historic relationships won't go back. And it tells me that we are closer than we've ever been to that relationship normalizing. And, look, 54 to 1, you talk about where that relationship has averaged. Gold is, everything that we've ever mined is still with us, whereas the silver gets consumed. It doesn't get recycled. And I sound like a bit of a broken record here, but if the natural relationship is 16 to 1, the mining relationship is 7 to 1, and the gold to silver ratio is closer to 90 to 1, something's out of whack here. And again, I just think that we're getting to a point with the price of gold where at some point the central bank buying, it won't continue on this trajectory. And right now, gold has priced itself out of the average buyer's hands. And it always has been historically, but it's on a relative basis. And it's why you see the masses in India, in China, going to silver. And this is where the real demand we've had zero demand out of the West for these metals, zero. Um, we're starting to see a little bit come in recently in the last couple of months, but really what's driven these prices, I think, since 2000 have been Eastern buying, and it's been central bank buying, and now we're starting to see it go on to Main Street in India, in China, and if we look at Q1 of this year on silver, 35% of silver demand came out of China, and it came out of solar. So a third of the market was taken up by those two entities. I think we've gone from, in the last 7 years, where it would be taboo to talk about some of the, you know, reasons to own gold, where they're starting to become mainstream and acceptable and recognized. But look, I think as long as we're in an environment where we've got stock indices at record highs, other asset classes at all-time highs and going higher, I don't think gold necessarily needs to be front and center in the conversation. It reminds me a little bit, and again, I'm limited to my 43 years on this planet and my 20 years in investing in mining. I'm limited to my own experience. It resembles 2007 a little bit to me, where you had stock exchanges, real estate prices, and gold all trading at a pretty healthy value. And it really wasn't until the relative value of gold in relation to these other asset classes was showing strength. Even though we saw the price of gold fall in 2008 from a January high of when it first broke 1,000 for the first time ever to a low of $680 in Q4 during the GFC, during the financial crisis. So gold was down, 30%. There are many things that are outperforming gold. The crypto community, the Bitcoin community can point to Bitcoin's outperformance, and you don't have to stop there. We can talk about fine art. We can talk about old Porsches. There's a number of asset classes that have taken gold's lunch here.
It's been a fantastic year for physical precious metals owners, and by many accounts, the best is yet to come. All the issues we've been warning against for years, including inflation, currency debasement, and government suppression of individual financial liberty, have started boiling over in a way that is so obvious that even the most naive citizen can clearly comprehend. Silver has long held the promise of significant upside potential amid increasing demand from industrial uses. But as every silver bug knows, resistance at $30 has been a tough nut to crack and continues to stand in the way of all bullish attempts to break out higher. How are you preparing for the potential impacts of inflation and currency debasement on your financial future? Share your feedback in the comments below. If you found this video useful, hit the thumbs up and subscribe to keep up with our latest updates. We appreciate you being a part of this journey.